Welcome back. We will now look at a comparison of absorption costing statements to marginal costing statements. We have this example of a firm who make a single product. The direct material costs £1.50 per kilo, direct labour £1 a kilo, production overheads £3 per kilo, selling price £9 per kilo. In addition, administrative overheads are £25,000 and 1/3 of the production overheads are fixed. So if we look firstly at the production overheads, they are £3 per kilo. So 1/3 of that, so £1, is fixed, which means the remaining £2 is variable. So before we look at the absorption costing statement and the marginal costing statement, let's just consider firstly what the production cost per unit would be under both marginal and absorption costing. So the production cost will include the direct material cost, which is £1.50, the direct labour £1, and with absorption costing we want to include all of the production overheads. So that gives us a production cost of £5.50. With marginal costing, marginal costing means we only include the marginal or the variable costs. So that will be the direct material of £1.50. the direct labour of £1, and just the variable production overheads, which we've identified as being £2. So that gives a valuation per unit of £4.50. So you can see two different production costs depending upon whether we use absorption or marginal costing. So now let's look at the statements. You should now be familiar with the preparation of these statements, so I'm just going to talk through the figures that are within it. So it's 30,000 kilos, selling price of £9. So the sales revenue, 30,000 times 9 gives £270,000. We have zero opening stock. The production cost, because we're looking at absorption costing, 30,000 kilos, and we have a production figure of £550. So 30,000 times £550. Opening stock plus the production overheads, plus the production costs minus the closing stock gives the cost of sales. Sales minus cost of sales gives the gross profit figure, and we have not yet considered the administration overheads, so we need to deduct those, £25,000, and we have a profit of £80,000. Now if we look at marginal costing, the sales still the same, the production cost 30,000 kilos, but under marginal costing we had worked out a production cost of £4.50 a kilo. So that's 30,000 times £4.50. So opening stock plus the production cost minus the closing stock, we have a cost of sales figure of £135,000. Sales minus the cost of sales gives contribution. We then need to deduct the fixed costs. Now with marginal costing, at this point we have not considered any of the fixed costs. So our fixed costs are going to be the administration, £25,000, but also the fixed production overheads. And we know that £1 per kilo is fixed. So for 30,000 kilos, £30,000 worth of fixed production overheads. So total fixed costs, £55,000. So £55,000, it's in the marginal costing statement. Fixed costs are deducted from the contribution, and we have a profit figure of £80,000. So both statements have given us the same profit figure of £80,000. It is just the presentation of the statements that is different. However, I'm now going to look at a second example where we have a closing stock. So I'm going to do the same as I did earlier and firstly work out the production cost using both absorption and marginal costing. So direct material is £5, direct labour £3, variable overheads £2, fixed overheads £1. So we have a production cost of £11 a unit under absorption costing. If we're using marginal costing, we will still have the £5 for the material, the £3 for the labour, the £2 for the variable overheads, but we will not include the fixed overheads. So production cost £10. So keeping those figures in mind, let's look at our two statements. So firstly, absorption costing. Now what we're told here is that 11,000 units were produced and 9,000 sold. Selling price is £15. So our sales revenue, 9,000 times £15, 135,000. There is no opening stock. Our production, we produced 11,000 units, and we know that it is £11 a unit. So we have the production cost. Because we have produced 11,000 but only sold 9,000, we have 2,000 units to put into stock. They are valued at the same production cost of £11 a unit. So 2,000 times £11, we have £22,000 of closing stock. So the cost of sales, opening stock, plus production of 121,000 minus 22,000, we have £99,000 cost of sales. Sales minus cost of sales, we have 36,000. Now we're doing absorption costing, so we need to consider the under or over absorption. We have £1 a unit and we produced 11,000 units. So that's £11,000 of overheads absorbed. We were told actual overheads 10,500. So we have over absorbed by £500. We add over absorption and that results in a profit figure of £36,500. So, will we have the same profit figure using marginal costing? Well, we start off the same. The sales revenue, £135,000. Production is now at £10 per unit. We worked out with marginal costing, production cost is £10. So the 11,000 units at £10, we have 110,000. Closing stock of 2,000 units is also at £10, so we have £20,000. Cost of sales is the opening stock plus the production minus the closing stock. Cost of sales is £90,000. Sales minus cost of sales is contribution. Contribution minus the fixed costs, and we now are interested in the actual fixed costs incurred, which we were told were 10,500. We're not interested in what we absorbed because we are not doing absorption costing. 10,500 of fixed costs, and we have a profit of £34,500. So we now have two different profit figures. Absorption costing has given us a higher profit of 36,500 compared to marginal costing of 34,500. So we have a £2,000 difference in the profits. If you look at the closing stock valuations, there is also a £2,000 difference in the closing stock valuations. And that is the reason for the difference in the profit. It is due to the difference in the closing stock valuations. So we can reconcile the two profits. So the profit as per absorption costing is £36,500. Deduct the difference in the stock valuations. There's a £2,000 difference, and you have the profit per marginal costing. So the absorption costing statements will always give the higher profit. By deducting the difference in the stock valuations, from the absorption costing profit, you will have the marginal costing profit. Now that £2,000 difference in the closing stock valuation is due to the fixed production overheads. Within absorption costing, the closing stock valuation of £22,000 includes £2,000 of fixed production overheads. With the marginal costing valuation, the closing stock value of £20,000 does not include any of the fixed overheads. So the difference between the two valuations is due to the fixed overhead, which is included in the closing stock valuation for absorption costing. So that brings us to the end of this recording.